Hello, Tim Storm here. Hope you had a great week. So here we are, March 24th. Two things I want to talk about today. First, blended FICO scores. And then second, we'll talk about interest rates. Actually, I'll talk about interest rates real quick first. So interest rates improved by 0.25% this week, even though the Fed raised rates by 0.25%. Now this is confusing for clients, and it could be confusing for pretty much anybody when they're seeing the interest rates are going down and yet they hear interest rates are going up. Now when the Fed raises the federal funds rate, they are fighting inflation. And just a month ago, they said they're going to continue to raise rates through the end of the year. Now all of a sudden, and this was really where it helped mortgage rates, even with the 0.25% federal funds rate increase, Jerome Powell, the chairman of the Fed, said that they're going to back off on the increases, really because it's breaking the bank system if it's not already broken. It's creating a tremendous amount of interest rate risk, and that is really hurting banks. And so hopefully this will fix things. But now that bond traders know that the Fed is talking about not raising rates the way that they were, and with continued inflation improvement, then we have seen some pretty good improvement in rates. Now, mortgage rates will never go down in a straight line, but still the expectation is that rates should continue to improve, at least from the analysts that I listen to. Now, next thing I want to talk about is blended FICO scores. Now, about a year ago, Fannie Mae, Freddie Mac, really FHFA, came out and said that they would start allowing blended FICO scores, but it wasn't really built into the systems yet. So now it is, and we're just now able to start allowing blended FICO scores. So the way this works is, say that you've got two buyers. One buyer has a 580 FICO score, and the spouse, or maybe even a non-occupant co-borrower who's a parent or something, has a 740 FICO score. We add those two scores together and then come up with the blended FICO score, or average FICO score, which would be, in this case, 660. We can use that 660 FICO score to get the approval on a conventional loan. A 580 FICO score, just having one borrower with a 580 FICO score under the old system, would not result in an approval. That'd be a denial. And then you could maybe, with somebody, do a manual underwrite, but that would be pretty difficult. Now we can get it approved based on the 660 FICO score. The pricing on the loan is still going to be based on a 580 FICO score. The loan level price adjustments for a 580 FICO score would be pretty high, but still there are some borrowers that can't get approval or don't want to go FHA. They need to go conventional for one reason or another. This will save them. Now, if it's a first-time buyer and they meet the income limits for an LLPA, or loan level price adjustment waiver, then all the adjustments that are hurting them because of that FICO score, or maybe even because of the property they're buying, like if it's a condo, are removed, so they can actually, even with a 580 FICO score, get loan approval and get a very aggressive interest rate, as if they were buying a single-family home with 25% down and a 740 FICO score. So definitely something to keep in mind. If you want to see what the numbers look like for one of your clients, then let me know. I'll put together a total cost analysis. Matter of fact, I'll show some numbers so you can kind of see what it looks like if they actually meet the first-time buyer requirements versus not. So interesting to see. But let me know if you have any questions. I'll be available all weekend. Hope you have a great weekend, and I will talk to you later.